Hi, I'm Björn Nussbaumer from macrobeat.co.uk. I'm not going to lie today, I'm happy it's Friday. It was a very crazy week indeed, and we will look into some of the topics as we go along. After the FOMC, or let's say the mess after the FOMC last week and the mess the following day with Trump's tariff tweets, we really got into the new week with a new issue which is coming out of China, and we're going to look at dollar CNH in a minute afterwards as well. Reality really is that it seems that the Fed 25 basis points cut did disappoint the market, and it didn't only disappoint the market, it seems to have disappointed Mr. Trump as well. So the tariff tweet the day later really has set things in motion, and the market is now already pricing an 80% chance of a 25 basis points cut in September, while 20% of people even expect a 50 basis points cut, which is still what I believe the Fed really should have done in the first place to get ahead of the curve. And I think we wouldn't have such a mess if they would have done so. Maybe they should really take a leaf out of the RBNZ, where we did expect 3 25-point cuts the rest of the year. They really just cut 50 basis points this week to just get ahead of the curve because they really see the troubles that we have out there. Now I would like to look on the first slide, which is the dollar CNH. I did plot a monthly chart here just to see the gravity of what is going on. So this week we had the first CNH fixing above the magic 7 level, which is the first time since 2008. So no doubt the market was set into a frenzy this week with China starting to, devalue the renminbi again, obviously to the dislike of Mr. Trump, but that's really what is going on. So far, the offshore held at the 715 area, and we now really want to see at what kind of pace the PBOC is going to devalue the renminbi, which is going to be very important for all the other asset markets. On the next slide, we see the dollar yen. That obviously took a big hit already on the tariff tweet, and follow up again got hit very hard on the back of the equity market selling off. Risk is selling off, and the market really got itself into a rather big frenzy, and probably rightly so. The next slide we have is the Aussie. The Aussie has been grinding lower ever since the whole sort of topics came up again. We then see this big bar down to new lows, actually well below the flash crash low from early in the year, on the back of China moving the renminbi above 7. The recent fixings from the PBOC have been a little bit more moderate, so the market was able to bounce and stabilize, realizing that maybe the Chinese devaluation is not at a high pace, rather at a slow pace. But at some point after this correction, the market will still realize it is still a devaluation, and it's still a risk of a currency war really brewing out there. On the next slide, we see gold. Gold is obviously the one which makes me almost jealous, because foreign exchange is a little bit more complicated when it comes to the dollar theme versus the risk theme, while gold, all that is going on out there, the worries about easing from central banks, the worries about equities, the worries about global events, all those reasons just push gold higher. So gold is in the fantastic situation where all the worries we have is always going just one way, which is higher gold. On the next slide, we see the impact these sort of events had on the equity market. We see a very steep drop on the Dow. We've taken out this sort of 2019 support, almost reached the 25,225 area, which is the next key support for the Dow. And if you break that area, it's really sayonara. For the time being, again, because the China easing out, the China deval seems to be at a slow pace, the market managed to recover. And in that sense, I guess the equity market was just able to bounce. But I think for next week, watch that China fix, watch at the pace it devalues. That will give us the idea of how the market will continue to trade. Thanks very much indeed. Goodbye.